Hello guys, Shahzad Rabati again. This video is a trade setup view of crude oil on a daily chart. So this would be started from the trading session on 16th of February 2017 onward. Remember guys, it is a swing trading setup. So if you want to snatch the full results and know about the strategy or the setup, you have to have at least for a month in order to have or grab the full strategy, right? Before going into chart, let's have a risk disclosure statement. This video is only for educational purposes and foreign exchange trading carrying margin and substantial risk, so therefore it isn't suitable for every investor. Okay guys, this is the crude oil daily chart. In order to know the exact position where the market is going or where the expected result would be come around, this commodity is highly influential. This commodity is highly influential by fundamentals, a number of fundamentals, right? The most important one, demand and supply. You probably hear some news from oil producing countries, OPEC and non-OPEC members. Therefore, one would imagine and think that if you want to trade in this commodity, you have to have fundamentals and you have to be known what's going on around this particular commodity. Well guys, for me, I don't bother, I don't concern all these things, right from the crude oil inventory to the others, OPEC and non-OPEC members, intentions, the cutoff and etc. What I'm concerned and what I have been seen in terms of the price action from the naked chart, and through this naked chart, my assumption is if the main participants are buying, I have to buy, but on certain points, so that I'll manage my equity with regard to risk, right? Okay, as you can see, you probably hear number of news with regard to crude oil. The crude oil prices would be, some says $60 or some says even beyond that. Therefore, the major phenomena or major thing is you have to buy it, right, on a certain price. What certain price means? What certain price means is basically when the trend is in buying, right? So this is the major trend line, right? I have connected this trend line into the major higher high points and the another major's lower high points, right? Okay, so I wouldn't go on buying of crude until break this particular trend line, right? But what would I do if the market won't break this trend line? Should I wait? Should I sell? I don't know at this point, but I need to know how. I just want to have another trend line, for sell. In order to sell, you have a trend lines which this setup is attributed should be on an upward triangle, right? So I can touch even this trend line through this way, because why? This is the higher high point, right? Through this there is a steep down up to this level, right? So I can say from this to this there is a compression, there is a consolidation. As you can see, even the day candles are squeezed one with each other, right? So you have to enter in crude oil when you need a clear view of buying or selling, right? So what would be the next? I don't know today's crude in a bit selling levels, whereas the previous two days, as you can see, hammer sort of candles, right, which just indicate that market participants are undecisive at that points, right? So I have drawn these two trend lines in order to expel out from this compression level. Whatever the level in sell or in buying, only the trend line will tell me, right? Supposingly, if in subsequent days the crude market would break this particular level and reach 52.79, something around about this, then I would presume that the market is in a bear scenario, though it may be a micro trend, right, a shorter period of trend, but I need to catch every trend, right, every swing. This is the aim of this trading setup, right? So if it would break this level, then I may on a sell order, and on a subsequent scenario, or on an alternative scenario, if in subsequent days the market break this level, right, this trend line, then I would be buying, right? So here at this point I have made a wedge pattern, right? Whatever the side will break, I will if the sell side will break, I will be in a sell, and if the buying side will break, I will be in a buying, right? Just presume it on initial stage, which is most probable thing for me, keeping in view this market. I would see a little bit further compression and downward movements of this crude price action, right? I may be expected crude would be check these levels, right? This particular level, or this particular level, or this particular level, or this particular level, right? It is up to you. You have to be decided by yourself. Keep in view your equity, right? How much volume of trades you intend to on this level, or this level, or this level, or any other level, but make it sure it must be attributed with money management rule, right? So I have devised a very simple set money management rule. If you risk $100, you must be having at least for $200, right? This is the simple set money management rule for mine, and I won't be in such sort of situations where if my stop loss would hit, I would be in a revenge sort of trading, right? Once if the stop loss hit, no problem, just be patient, analyze yourselves, view the market in a retrospective way, and so that you will be able to recover your losses and will be in a winning stream, right? Okay, this is the first scenario. If I am assuming that this market has to break this particular level, then I would be on a sell. The market, my target would be around 50.43, 52.79 would be my sell order, right? And stop loss, obviously stop loss is a very, very important thing. Even before entering, one would imagine the stop loss, if it wants to retain in this market for a longer period of time. So there was the previous swing high, right? At this point, this was the previous swing high. Also the downward downward trend line also there, right? So I'm expecting if the market would in compression mood like zigzag of this one, right, it may be break somewhere either at this point for sell or this point for buying. However, this is my first scenario. If it breaks 52.79, go short, stop loss 54.20, and target is 50.43, right? This is the first scenario. The second scenario is if the crude break 54 levels, right? If it breaks 54 levels, then you have to be buying, right? But you need to wait for higher low, right? Because if it breaks this level, right, we may presume 54.95 or 55 somethings, that would be the high point at this point, right? And that would be on a high point. So we assume after high market would higher low, so we'd enter in buying on a higher low levels, right? But at this point, if you are really an aggressive trader and to be jumping into this crude market, the most probable thing for me is to sell. As I've said, these points, if market would break 54.20 levels, then I would consider to buy, but on a higher low level, right? Just presume the market has new high at 54.95 or something around this, right? I'm now assuming after breaking this level, if market has new high around this level, 54.93 or 55 somewhere, after posting that level, one would imagine to have a lower levels, higher low points, right? And higher low prop points should not be lower of this previous swing low, right? In that scenario, that should be up from this levels as well, around about 52.30 or above somewhere, right? Then I would buy on these those levels, and my target and risk would be the same. Whatever I risk, supposingly after making new high, it has the market would made new higher low around 52.79, then my stop loss would be obviously the previous swing low 51.40, right? So this is my trade. This is the trade setup. I hope it would be beneficial for long-term traders, for swing traders, or even for intraday traders as well. So if you have any question or query, please don't hesitate, just call me. You may even call me, you may contact with me through various resources. It is up to you. Thank you very much for viewing this video. Have a nice trading.